Make a guess, where are we? We are in one of the #1 airport in the world. So if you can hear me, because I'm testing out a new mic, if you can hear me, just say hi or make a certain comment so I know that you're here. So this time is a Thursday with Sean, and I'm waiting for my flight to Hong Kong. And in Hong Kong, right, we're going to meet Mary Buffett. We're going to talk about more stocks, and maybe I can't get her onto the next Thursday, but I can ask her what are some of the stocks we are looking at. Now, I'm going to talk about 3 stocks that may take off. Okay, actually, I'm just talking about 3 stocks before I take off to the plane. And you know what? Just walking around this airport, right, we have found many very interesting stocks. Let me share with you. Okay, can you guys hear me? If you can hear me, let me see. Just type hi or share how you are. Okay, so that I know that you guys can actually hear me. Okay, let me just reverse slightly and show you one of the stocks that you may have been walking past a lot of times but you don't even know. Okay, if you can see behind there, DFS. There's this particular stock called Duty Free International. It is actually based in Malaysia. Okay, hi Yuehua, thanks a lot. Okay, it's based in Malaysia, and this stock itself, right, has been doing duty free like all over the world. Now, I'm going to compare 3 particular stocks, right? So this is one of them, duty free. The second one, it is over there. Now, if you can see the whole entire chain of restaurants, there are actually quite a number of... No, there's only one listed company that I can notice. Can you see Curry Times? Okay, if you can see Curry Times, right, you all know which company is listed under? Or rather, which company owns Curry Times? Curry Times is actually owned by Old Chang Kee, another listed company in Singapore. And the last one that I want to share with you about, can you see these 2 officers that just passed by me? We're going to talk about SAT Services. Okay, I have to spell it out, SAT. Otherwise, if you just pronounce SAT, it just sounds like SAT Services. And well, because of the pronunciation of Asians or Chinese, right? SAT Services as in SATS Services. So I want to share with you these 3 companies since we are at the airport right now waiting for the plane to come and pick me up. There's a certain delay here. And I also noticed something very interesting. So the first one we talk about is duty free. Now, duty free, by the way, all 3 of them listed in the Singapore Stock Exchange. So let me show some of the finances of duty free. I realized that on the Facebook Live, the numbers are flipped over, correct? The images are flipped over, but doesn't stop us from studying stocks together. If you can see the earnings per share, okay, let me show you something very interesting about duty free, right? And this is something I noticed about the trend about the stocks in featured in this particular video itself. Duty free, if you can see, the revenue, it went up from 3 million all the way to 500 over million. Along the way, it has been increasing, correct? But let me show something very interesting about duty free. If you look at the earnings per share, okay, here, initially it was a negative, and it doesn't seem to be moving. Okay, from 6 cents, 4 cents, and it's still at 6 cents right now. Okay, but when you look at the income, okay, you look at the net income, it seems to be increasing a bit and then slightly flat. Okay, now this is something that I want to share with you guys. Okay, why is it that the revenue, the earnings looks okay, but the earnings per share seems flat? Because by right, the company is making more money, but why isn't every single share becoming higher in value in terms of earnings per share? Now, this is something that I want you to take note in this video. This is the part I want to share with you. Shares. Can you see shares in millions? Okay, so this portion, right, you can see that the shares of this particular company, duty free, initially it was 22 million, it increased to 800 million, and it kept increasing over the years. What this means is they keep issuing shares. So, okay, yes, thanks Suresh. I know we're getting a mirror image of the video, correct? So let me just explain in details. Now, this company, right, although they are making more revenue and more income, but they are also issuing out more shares. Very likely they are raising funds. So when they issue out more shares, right, okay, what it means is this. For example, let's say me and you and maybe 10 of us, let's say 10 of us, we are shareholders initially, and we are making, let's say, 10 million every year. So 10 million divided by 10 of us, 1, 2, 3, 4, 5, 10 of us, right, each of us are making 1 million. But now, if the company makes more money to 100 million, but at the same time, we keep injecting more shares, meaning you say with 5 more partners, and now there are 100 100 partners. Instead of 10 partners, we increase to 100 partners. So even though the company is making more, individually we are not making more. This is what is happening to this particular business, duty free. Okay, I know it is a mirror image, correct? So that's why maybe when you look at me, I'm not as handsome as usual because it's mirror image. Now, let's go to the next company, Old Chunky, correct? Which is just behind. Can you see curry times the is it there? Yeah, the signature yellow color Old Chunky. Do you guys like to eat Old Chunky? What's your favorite food in Old Chunky? Please type it into the chat box, man. Of course, we love the curry puff. It is very high in calories, but doesn't matter. It's expanding and it's all over Singapore, right? So for Old Chunky, okay, because it's mirror image again, let me just read out for you. Some of the key things is the revenue, they increased from 41 million all the way to 87 million. In this 10 years, they more than double their revenue. So maybe when you notice around the number of Old Chunky shops, it has been increasing, sprouting out like mushrooms all over Singapore, right? And you realize when you go to petrol stations, some of them, they actually sell Old Chunky merchandise. So is it a good business to invest in? Curry puff, chicken wings, fish ball, all these are food that you shouldn't eat unless you're a shareholder, okay? Okay, so sorry to the Old Chunky shareholders. One thing to think about Old Chunky, very stable earnings per share. Again, let me show you again. Here's the interesting part. Mirror image, sorry about that. This is in 2007. The revenue is 41. By 2018, the revenue is 85, more than double their revenue. Their net income, okay, you can see is relatively flat. So this is something that I became very curious also, you see. How come they are doubling in revenue, but their net income is almost flat? Very, very simple. The operating cost is not easy, you know. So, okay, yeah, some people are giving interesting comments. Okay, so the Old Chunky is for kids. Okay, they can afford the calories. That's correct. But of course, habits, right, is injected since young. You know, you make them eat Old Chunky when they're young, they'll eat Old Chunky when they're old. So, Old Chunky. Okay, so now back to the dividends, right? For Old Chunky, very likely it's a dividend stocks. Let me show you. They've been giving out dividends pretty consistently. But one thing I want to highlight about Old Chunky, the payout ratio is more than 100%. So they are making like 20 over cents per share, but they're giving out 30 cents. Oh, sorry, they're making 2 point something cents per share, but they are giving out more than 3 cents in dividends. So this makes me a bit stir in my stomach, you know, not just their curry, but the way they're giving out dividends and their shares increase, right, is a lot. Meaning to say they also issue more and more shares. Okay, so this is one part that I want to cover in this video. You realize initially their shares is 85 million. It has been increasing to 121 million. So again, when companies issue out more shares, not a very good sign. Now, let me show you. Okay, some of you may be a bit disappointed. I say, hey, Sean, you're coming on to Thursday with Sean and you're giving us lousy stocks. Okay, first of all, disclaimer, these are not lousy stocks. I'm just highlighting certain issues. And Old Chunky, in my opinion, still quite a good shop. I still see a lot of customers, just by walking around here, I see a lot of people visiting Old Chunky already. It's just that it is a dividend stock. However, I'm just a bit concerned about their dividend payout. Now, let me share with you one extremely interesting stock that I myself have been looking at for many, many years. It's called SATS. How do you pronounce that? Okay, never mind. You can't really reply me on this Facebook Live, right? It's called SATS. SATS, SATS. Okay, so this company, right? A few things to know about this company. They are also expanding overseas. They are like in, for example, Saudi Arabia, and they are in a few segments. Okay, so if you are in the airport services, they are providing in-flight catering. They are also like doing some of the security. So very interesting company. And you realize Terminal 4 just opened, and there's a lot of expansion. So not just our Terminal 4, you know, and SATS, right? They also they're also opening up in e-commerce. So e-commerce, they are doing this highly automated meal bags sortation facilities. You can realize when you come into T4, right, a lot of things is like automated, right? I think a lot of the initiative is also actually from SATS. So now I want to show their numbers because it's very, very, in my opinion, impressive. Okay, so SATS, highlight some of the numbers. The revenue from 1 over billion to 1.7 billion. Okay, I just highlight some of the key things, and their dividends, right? has been increasing from 14 cents all the way to 17 cents. Very stable. Okay, again, mirror image, but just highlight a portion of it. Dividends, very, very stable. And the dividends payout is very, very stable as well. So they have been paying out about 60-70% of their dividends, a very strong dividend stocks. So again, SATS, ticker symbol or the Singapore symbol will be S58. Now, this stock currently, it is slightly, I would say, is overvalued in terms of PE ratio. Let me just zoom in on a few highlights, okay? Their PE ratio for SATS, by the way, you all know what do they do? SATS, very simple. If you go onto the plane, you see some very big muscular guys throwing your luggage onto the plane, right? These are very likely from SATS. Okay, maybe not throwing, they do it very gently, okay? I don't want SATS coming to sue me, okay? Anyway, disclaimer, again, I'm not supposed to tell you what stocks to buy, but you can think about it yourself. Will this company continue to make money for the next 5, 10, 20 years? Again, the company we are talking about is SATS, in case you just join us. SATS, as long as there's airport operations, they are almost like a monopoly here. You can see they help you to send in the luggage, put onto the plane, in-flight services, in-flight catering. Very, I would say they have a very, very strong economic mode in Singapore, and they're expanding overseas also. So P ratio right now is 21. The past 5 years average about 20. This company has been growing a lot. The lowest P ratio ever, right? It was during 2008. So now, when is the best time to buy SATS? You know, there are a lot of times there's like crises, like for example, there's certain like bird flu or there's certain like SARS. During this time, right, people start to travel a bit lesser. Interestingly, right, SATS usually will not be affected so much because now, because of all the disease, there's more measurements to be taken, right? In fact, their services is required even more. So like even like let's say during terrorist attacks and stuff like that, SATS, right, actually their services is needed more. So it's very, very non-cyclical, very recession-proof. So personally, I give a thumbs up for this company, SATS. Now, one thing you can actually buy SATS. This is my personal strategy. So I'm just sharing with you. I'm personally like accumulating this company bit by bit. I will not buy in huge chunks unless it's very cheap. In 2008, the P ratio was 7. So when you see that SATS gives you a very low P ratio, below let's say 15 or something like that, that's where you can really take a bite into it. But one reason you can buy SATS is because of their dividends, and their dividend yield right now is 3.46%. So 3.46%, right, compared to a lot of other dividend stocks that we've been covering about, it is not really saying very, very cheap, but it's attractive if you like, instead of putting it in the bank, put it into a company that has potential to grow, because their growth has been quite good for the past 10 years. Feel free to ask me questions. Okay, Marcus Ong is asking, will DBS drop to 22.5? Let's take a look at DBS. Very interesting question. Now, so it's time for me to predict whether the stocks will drop to 22.5. I can hear a lot of my team members screaming, no, don't make predictions. Okay, but let me share with you my personal opinion. Okay, now DBS, any particular reason why you choose this number 22.5? Currently it is 25.27. Okay, now let me share with you my train of thought. Okay, let me share with you my train of thought. Before I go into when is it a good time to buy SATS. Okay, for SATS, okay, thanks Jin Yang for actually answering. SATS, I will buy huge chunks when the dividend is above 5%, but dividend yield above 5% or P ratio below 15. It is quite a good growth stocks. Now, going back to DBS. Okay, let's look at DBS fundamentals right now. We all know that this is one of the very strong stocks. And disclaimer, I'm also a shareholder. DBS. DBS Group. Okay, I'm just checking it. You know, this is a wonderful thing, you know. Anytime someone talks about stocks and you have internet with you, you can almost check anytime. Now, DBS right now, the PE ratio is 12.21. The price to book is 1.38. I would say it's like a fair value. DBS about 2 years ago, I think it was probably almost half, correct? Because that's where I bought into DBS. In fact, my wife was the one who triggered me because their price to book ratio. In case you are thinking where am I looking at, right? I'm still looking at Morningstar. you can see this portion, price to book. When I buy into banks, right, this is the key ratio that I look into. So for DBS, I always look, if it's below 1, price to book is below 1, I will go for it. Now, so would it drop to 22.5? I think I know where you get this 22.5 from. Let me just make a guess. Is it the book value? Okay, the book value per share, no, the book value per share is actually 18.42. Now, I've seen DBS gone below lesser than 1 in terms of price to book value. Meaning to say, is there a chance it will go below 22.5? I do not know for sure, but you know, it's always, there will always be news, always be crises. Now the interest rate is going up. There will be, let's see what kind of interesting things happen to trade war. It doesn't seem to be affecting the bank though. But I think if ever DBS, I'm not even aiming for 22.5. If it goes below 18.42, this is the time I will enter. Previously, I remember there was one time I bought, okay, there was the few years back, it was below $15. Okay, that was 2015. Below $15, it was the book value, you can see here. Sorry, I know it's not very clear. But when the book value of a particular good bank shares, okay, the book value is there and the price goes below the book value, that's the time I go in. Okay, so this is something I will say. Whether it will drop below 22.5, I'm not too sure. Should I say I hope so? Okay, the truth is I hope that the price will be actually cheap. That's where I can buy. But I'm aiming for 18. That's where I'll enter. Not even 22.5. So this is my opinion. Okay, great. Now, even when you talk about DBS, right, I can see a DBS like a ATM over there. So you can see that just by waiting at the airport, so many stock ideas, and a lot of us wish that we have enough money to buy, correct? So now, as you are resting around, looking around, or like shopping around, right, just take a look. There are many stock ideas around. So this particular Thursday with Sean, wow, thanks for spending time with me while I'm waiting for my plane. There's a bit of delay. When I go to Hong Kong, yes, next week, let's look at some Hong Kong stocks. I'll keep my eyes open while we eat the Hong Kong dim sum and also shop around. And Hong Kong, by the way, it is, in my opinion, quite an undervalued place because the P ratio of a lot of stocks is quite low. Cool? So, I'll see you guys next week. Thanks for staying with me, or rather spending time with me while waiting for the plane Thursday with Sean. See you guys. Bye-bye.